But Wagons is under pressure on the back of a weak Q1, very weak set of numbers. I think the revenues are down 50%, profits are down 66%. Vivek Lohia, MD of the company, is now joining in. Vivek, you've already articulated that the reason for the performance, the weak performance, is shortage of wheel sets supplied by the Railway Wheel Factory of Indian Railways. Is this problem going to sustain in Q2? When do you see this problem recovering? And what happens to your guidance? I think you had hoped for a 5,000 crore revenue in FY26.
Yeah. So good morning, Rima. So we expect the guidance. I'm pretty positive on that. From July onwards, we have seen that the railway supply of wheels has stabilized considerably, and we expect things to improve in the coming months. So we don't, whatever discussions which we had with the railways, we don't expect any challenges going forward. Our wheel production itself is picking up this year. Our wheel plant, Jupiter Tata Wagonka, we will be doubling our production capacity. In the last quarter itself, also, the supply positions were much worse than what you see from the railways. We pushed in about 4,000 wheel sets from our own supplies to take care of the shortfall. But if the wheel situation improves and which we expect it to happen, we expect the whatever guidance which we have given that will make it up in the coming quarters. On the private side, you see our performance is steady. We are building on the order books, and if you see the margins per wagon margins, that has improved. And now with the in the next quarters, once the revenues improve, you will see the EBITDA as well as the profit margins to improve.
Okay, Vivek, when you're talking about you maintaining your guidance that you have for FY25, what happens with Capex? You had a 2,500 crore expansion plan. When will you start seeing the synergies from this Capex that came by? And what about the capacity addition that you'll see because of that?
The Capex which we are talking about is completely on track. The Orissa wheel project which we are talking about, it's already the construction has started. We are very, very bullish on that project. We expect that from end of next year, I think the revenues from that project will start kicking in. It's got a big element of exports to the European Union also built into that project. So that is something which, and independent of that, our wheel business in Aurangabad is growing. As I've told you, this year we expect the revenues to be close to about 600 crores from that facility itself, which will go up to 1,000 crores in the next financial year. So on the wheel side, the Capex, we are very confident that's on track. On the EV business, again, that business is now, we have launched our first vehicle. We are going to be launching 2 other vehicles by end of this year. We are expanding our dealership network. In the next 2 months, we expect about 8 to 10 dealerships to open across India. Again, on the battery side itself, we are seeing the battery business growing by about 200% month on month. And we have this month, we'll be launching our first BESS system, a 10 feet as well as a 20 feet BESS system. So that market is again, the demand in that market is very strong. And so we expect that business also to pick up.
Right. Two quick questions, Vivek. You mentioned your revenue guidance stands. Does your margin guidance stand as well between 14 to 15%? And 2, what's the order pipeline looking like for you, especially because for a network as big as the railways, as much as the upgrades that you have seen in terms of coaches, the L2 from Utkrish to the LHB, are you seeing more orders towards that coming forward as well? What's the order pipeline looking like?
So in terms of the margin guidelines, again, as I've told that per wagon margins have improved. So we expect the margin guidelines, we don't expect any kind of challenges on the margin guidelines. The order books, definitely before end of the year, we expect railways to come out with substantial orders. As you're aware that, under Honorable PM's Gati Shakti scheme, railway is expanding its network considerably, and there's a huge push to bring in traffic to the railways. So we do see that the order pipeline should improve. On the private side, again, we are seeing a huge traction. And if you see our private order book numbers, they continue to remain strong, and our deliveries also there is consistent. So in terms of order book, definitely before end of the year, we expect things to improve.
All right. Thank you so much for joining in today and telling us what the plans are for the company going forward. Q1 was weak, but they maintained their revenue growth and EBITDA guidance. That's the word coming in from Jupiter Wagons. Time for a short break. Management of SmartWorks co-working spaces will join in next to discuss their Q1 numbers.